we've invited two fund managers to help us try to understand have we seen the worst in the market? And to join us in the panel, we have with us is Mr. Miguel Agarao, who is currently the Vice President of Field Equity Management, where he helps manage different funds under Field Equity. Field Equity, has about 18 billion in assets under management and has the longest and one of the best fund management, best performing equity fund in the country for the past 30 years. And he is responsible for crafting and presenting the strategies and outlook of Field Equity. Welcome, Miguel.
Good afternoon, Marvin. Good afternoon, everyone.
Yes, to join us as well is Mr. Edser Trinidad. He is the head of investments and research of First Metro Asset Management. He's also one of the veteran fund managers in the industry, and FAMI, First Metro Asset Management invests about 14 billion in assets under management. Thank you for joining us, Edser.
Good afternoon, Marvin, and thank you for having me here.
Sure. Let me start with you, Miguel. Pisahan na natin. Is the worst over? Go.
Okay, I'll do short answers, talk show style. Economically and fundamentally, no. Price action, we're getting there. It's really, as the speaker said earlier, from inflation to rising interest rates, it's now recession risk that is driving the market. The earnings downgrades have not happened yet. Economic growth downgrades are already happening. If you look at the global investment banks, they've started pricing in recession risk from 0 to 10% to now 30 to 60%. So Goldman's like 30, Bank of America 40, you have others are like 50, 60%. So they're starting to price that in, even though it technically hasn't happened yet, unless 2Q is actually negative growth for the US. And you can hindsight look back that a recession actually started in January for the US because January is a slight negative growth reading. In terms of price action, the markets price things forward 6 to 12 months. So, a big chunk has been priced in, but has all of it been priced in is hard to say.
So if it's not yet the worst, are we getting there naman? I mean, are we bottoming out? And if it's bottoming out, baka pwede ng, if it's not yet worse, parang bebenta muna o hintayin ko mag-bottom tsaka bumili. Paano ba yan?
Okay, prices have fallen so much, okay, that if you have not sold at any time in the past 9 months, I think it's too late to sell. Unless you're holding like stocks, specific stocks that might go bankrupt or might not exist 12 months from now, ibang usapan yun. Get rid of those anytime, right? But on a fund level, I think it's too late to sell. Do you buy? This is the time to go bear watching. The market, for those, because I know a lot of your listeners follow technicals, okay? If you look at the technicals a few weeks back, akala mo nagbo-bottom na eh. Guess not. So on technicals, it's trying. Is there a confirmation? I don't think there's a confirmation yet. Fundamentally, the factors which coincide with an actual bottom, some are there, but not all of them are complete.
So, hintayin na lang muna. Hintayin na lang muna tayo.
Yeah, like if you want to buy, just space it out. You don't need to rush. Don't be aggressive. I feel more for those who are 100% invested. They're the ones who, if your risk exposure, if your equity exposure is too high, I will understand if they reduce it even at these levels. Mm-hmm. Not that I'd recommend it, but I find it understandable.
Maybe if you don't you cannot handle the risk or handle the volatility, and things can get worse, diba? Even
before they get better.
Yeah, that's right. Thank you. Edser, tingin mo, we saw the market drop last year or even the COVID days, mga 40-50%. And anong ba tayo ngayon? We're 6,100 something, diba? Tingin mo, what do you think?
I think I tend to agree with our panelists. I think we have yet to see the bottom. Kasi in terms of earnings estimates, I think the potential higher inflation environment, which can lead to potential slowdown in consumption, it hasn't yet reflected on analyst expectations or earnings. I think if you're arguing based on our latest survey among our broker partners, they're still looking at double-digit growth for 2022. And if you're going to ask them, when are you going to make some changes on your forecast? I think most of them are still waiting for second quarter numbers to come in. That's where they're going to cut down their earnings. So right now, the market looks cheap. I think in terms of the PE right now, we're trading at about 15 times thereabouts. That's basically almost one standard deviation, below the 20-year mean of about 16-17%. I think so. I
17
think.
times, yeah.
But if you're going to start cutting down your earnings estimates, so Big Joe, aakit na naman yan yung PE mo. So that makes, that gives you, a big question. Is the market cheap enough? Diba? But I think in terms of the downside risk, gaano kalalim yung market to go? I think, in my opinion, medyo we're not going to see going to the 2020 level, diba? Where we've seen, market going at about, again, correct me if I'm wrong, at about less than 5,000, diba?
Yeah.
If you're going to look at the foreign holdings right now, if I'm going to share, my screen, no? Let me just share you my screen. There you go. Can you see it?
Yes.
Okay. The foreign ownership is now at historic lows. So the question is, I think in terms of heavy selling coming from foreign investors will now, I think, be minimal. Considering that yung foreign participation is really low. Although
babalik ba yan, Edser? Babalik ba yan?
in terms of I think there's a possibility. Una, there are things that I think the Philippines has to, I think, or especially the new administration. It all depends on what are the economic policies that this new administration will do, and how to, I think, stave off a lot of concerns on, namely on the increasing current account deficit. Those are the things.
Really low na, no? Medyo mababa na talaga. Parang wala nang pipigain dyan, eh. No?
I think yun ang critical here, and I really parang in a way parang see that there still is parang some more pressure to go low, but I think the worst is over now. Yeah.
Could be over, and probably if you're looking at the long term, still, I mean, it's your equity. Ikaw, you've been in the market for so long, and you've seen this up and down. And if you compare yourself or the past, where are we in that area? Meaning at 6-1, ano na ba yan? Is that bottom na ba yan, or milalaglag pa yan?
May bababa pa. Pero I think it's likely that we'll reach 5,000. Barring some sort of any huge any additional developments that can severely affect our economy.
Yeah.
I again, kasi ito, considering I've been covering the market for more than 20 years, and we've seen a lot of cycles, di ba?
Yeah.
For every despair in the market, it also parang shows you an opportunity. It presents an opportunity as an investor, di ba? Last year, rather in 2020, di ba? Nung biglang bumagsak to about 4 or 5 ang market, all of a sudden within the next couple of, I think, 5 or 6 months, it was up by about 50%. For those that have been able to buy at those desperate moments, I think there's a
They'll be rewarded.
substantial, reward that
Mm.
that presents for every investor.
Right. So, yung I'd like to ask this you were an analyst before. And si Miguel rin, no? You guys were analysts before, now fund managers. You wear both hats. And sinabi mo kanina, Edser, that hindi pa yata, it's not yet in the price. I mean, the downgrades of the analyst. And it appears that parang medyo they're kind of behind the curve. Parang ganon, di ba? In your experience, ano yung, is that the behavior of markets now? And if they haven't downgraded, yan na ba yung, and once they downgrade, yan na yung buying opportunity? Ganun ba yan?
Kasi right now, the reason why most of the analysts are still hesitant in downgrading, kasi there's still mixed signals, diba? I think if you're going to look at the bank lending, the latest report, it was about 10%. Tama? So that's a positive sign. That means that the economy a lot of companies are borrowing. That means, they're quite confident about the economy. Diba? And if you go anecdotally, if you walk around, if you do your on the ground feel of what's happening, you see some people are still going out. There's still some semblance of normality, diba? So I think that's the reason why a lot of analysts are still hesitant in cutting down the numbers. I guess they're just hoping second quarters may not be as worse as everyone had feared. And lastly, because I think a lot of, especially consumer companies, have started to adjust their prices. Diba? They're hoping that, with the price increase, there might be a possibility that any increases in the cost of inputs will be softened by the increases that these companies have done.
So, Miguel, balik ko sa'yo. What do you think? You agree?
Okay. Internally, I'll address this on a more quantifiable basis. Internally, we have our own models that attempt to predict the peaks and troughs of the market. So the first half so far were correct. Now, in trying to get the bottom on the fundamental side, we split it into two different things on the first level, whether this is a shallow or deep recession. And after that, I don't want to share too much, but just to explain, assuming this is a shallow recession without the other traits in the next filters, it means market has bottomed already. Okay, but if it was a deep recession, that bottom comes 3 to 6 months from now, which brings us to the next filter. We do not anticipate a deep recession. So this is very like the shallow recession. The main difference between this recession and others is there is an unprecedented removal of liquidity because of all the unprecedented liquidity that was put into the market. As Clara, the speaker from JP Morgan, noted, she had the chart which explained it. We have that also internally, but a bit different. The amount of liquidity can be correlated with valuation. So looking at valuations on a 5, 10, or 20-year perspective is not exactly accurate versus looking at valuations per period based on liquidity that was injected into the economy. Then the chart actually smoothens out. Okay, so if you take out that liquidity, hypothetically, Marvin, let's say we follow our model to the extreme. If you take out all that liquidity, we are not cheap. But we do not anticipate all that liquidity being removed from the market. Meaning to say, that bottom, if it hasn't happened already, it's going to happen fairly soon. Now, that's on the recession timing side. Now, if you look at the economic side, which is, the inflation / interest rate dimension, so think of it as an X and Y axis, right? If you look at, I watched Jerome Powell's testimony in Congress, and there were some important lines there. He used 3 recessionary periods as the model for his interest rate hike. So mid-60s, mid-80s, and 1994. So without going into the details where it's likely going to be something like 1994, very likely, what I will say is a recession in the US does not necessarily mean a recession in the Philippines because we anticipate the China stimulus via the injection of a lot of credit supply will now be a function of how much credit demand will actually be available. And then that's going to offset the weaknesses in the global market. However, on the inflation side, the question is, has inflation peaked? It depends what commodity you look at. So, I want to be a bit bullish here. If you look at wheat, wheat has erased more than half the move already. Okay? Palm oil has erased practically the entire move since the Ukraine war and the Indonesia export ban, right? So those commodities clearly okay na. But how about corn, sugar, oil? What's clear is whether or not they have peaked, very likely we believe, barring some black swan event like a nuclear missile or something, those have likely peaked. And for sure, the parabolic move is likely done already. So if inflation has peaked, then let's go back to Powell's testimony. Is inflation plateauing or going down? Because peaking will not create the same effect as peak and go down. Now, peak and plateau will result in the same amount of demand destruction as, but it hasn't peaked yet. So in Powell's testimony, he said that they will continue raising interest rates until it is clear inflation is on the downward trend. Okay, a blip, like if you look at the March, April, May, for example, if you look at US. So March to April, if you look at, there was a market up move in May because it looked like April inflation went down a bit already. Then in May, it went back up. That was a base effect calculation issue because of the way inflation is calculated in the US. So inflation peaks, hypothetically it peaked now. The transmission rate, if you're a businessman, you'll notice it's 2 to 3 months. In those 2 to 3 months, interest rates should still be going higher until the Fed is able to engineer controlled demand destruction to prevent inflation from spiraling. That, or we go back to our college textbook. Demand destruction by a runaway inflation. We don't want that, so we go for plan A.
Grabe talaga, Miguel, ikaw talaga, the way you explained this. Ala ko, pero ang nakuha ko sa'yo, in the next 3 to 6 months, it looks like it's going to bottom out. Is that right? Is that what you said?
Hypothetically.
Hypothetically, but based on your model that you were explaining earlier.
If inflation peaks between now and the next 3 months, then your market's then it's time to go bear watching for a bottom.
Bear watching meaning handa ka na, ready to
yes.
just pick up.
The new bull market will be born when the economy can grow despite tighter monetary policy.
Yeah, the key is the economy.
Yeah, let's just use that one sentence. Because your next stage is the cutting of rates sometime next year. So that's the next one. So I don't know how you want to because like even the definition of recession is tricky. The popular definition is 2 quarters of negative growth, right? The way we define recession, we use depth, diffusion, and duration. So we don't look at 2 negative quarters per se. Like for example, COVID's only 2 months. That's a recession, right? The one last year in 2020. Technically, that feels like a freaking recession, even though it's in 2 quarters, right? But if you follow that definition, technically it's not. So then we go about different ways of defining it.
Okay. Sige. Let's look at the questions the advanced questions that given by the clients. So that let's try to answer them one by one. We group them together so that we can maximize our time. So asked by Felipe, is it possible for the PSE to advance while US is in recession? Sinagot mo yun, Miguel, tama? It's possible, right?
Possible, but highly unlikely.
Highly unlikely.
Yeah, next. So we follow the move of the US. If the US is falling like 20%, how the PSEi, kumbaga saling pusa lang tayo diba?
Ito, hirap na tanong ni Lee they're asking us to be how low will the PSE go? Ano ba yan? And how long? Miguel, tuloy mo na.
Well, it's a function of when the recession starts. Question one, is it shallow or deep? Second, when will you reach terminal interest rates? The sooner you hit terminal interest rates, and then the shallower the recession, the sooner we bottom.
Yeah. Yeah, maraming ano yan eh, maraming dependencies eh. So it's kind of just predict the PSE without all of these things
Yeah, we
happening.
don't have a crystal ball. What
Yeah.
we know is if A happens, then B happens. If C happens, then D happens. Is
Yeah.
it A or C? Is what we're trying to guess.
Yeah, but I think it's real. At least what we can really see is it's on the way there, diba?
Yeah.
Simply. Okay, next group of questions on the investment picks. Syempre, tatanungin to by Jasmine. What particular high dividend yield stocks can you suggest? Miguel, you also have a high dividend fund. Anong
Yeah, that's been the
tinitira mo?
mega outperformer. I'm
Hmm.
surprised actually. Yeah, but that's like an outperform for long because what really carried your dividend yield names are not only the likes of PLDT and Aboitiz and Semirara and Globe, it was the REITs. What you have to remember, REITs are priced in terms of yield, and I think their parabolic rally is done. Almost all the REITs are below IPO already, except like one.
So anong dividend stocks pwede ngayon? Maganda ngayon.
Well, I think the REITs at a certain point, if it's at a comfortable yield na for you, you're willing already, REITs are okay. I think PLDT is okay. Semirara is a function of your view on oil because that's what's correlated with coal prices. Yeah, so I think risk reward PLDT would be the safest. And you can just rank PLDT, Meralco, then everyone else depending on your view.
Yeah, PLDT will always need it. Will need it. I
And
thought next.
Meralco.
And Meralco. Edser, asked by question by Stephanie, what is the best investment to balance the portfolio? Meron kayong balance fund, di ba?
Yes, actually you have two balance funds. One is a plain vanilla balance fund, and the one is called Save and Learn Focus Fund. The main difference between the two is the Focus Fund is more of a dynamic allocation fund, meaning we can go high on equities or vice versa. And most of the companies that we choose under Focus Fund are purely companies that provide dividends.
Just
So
favor ones.
basically, in a way, there's some sort of semblance of stability, no? Technically, but unfortunately, even those what you consider as a stable investments or companies have also suffered some sort of major correction. But I think at this moment, the potential downside for those stocks, I think, will now be limited, and to some extent, that will be compensated by a higher dividend yield because bumaba na nga yung presyo ng mga yun, no?
And then you balance it with fixed income.
Yes.
Is it more money market?
More on the short term placements and money market instruments. Kasi ngayon medyo mahirap ka na, di ba? As because of the yields. The best thing to do right now is go short.
So balance it with short investment in fixed income and some dividend. Yeah.
Yes.
Okay. Sige. Next group of questions on investment strategies. How do I diversify? Do I need to focus more on bonds versus stocks or mutual funds versus stocks? Miguel, mamimili ba mutual funds versus stocks, bond versus stocks?
Well, I think on the mutual funds versus stocks, I think own both, right? But on the bonds versus stocks, this is very tricky, okay? Last year in my presentation, I actually had a section there, and I mean, I got a lot of pushback there, but what I said was, is this the end of 60-40? Because that's what all the private bankers recommend, right? To the high net worth guys.
60-40 meaning 60 fixed.
60 bonds, diba? 40 equity. So I was saying then, I think it's the end. It's a 35 plus year bull market in bonds that's done. It should no longer be 60% in favor of bonds. So in the current scenario, there's gonna be a mark-to-market hit as yields go up. If you look at Philippine 10-year yields, it went from 3 to 7%. Can you imagine like ilang years of yield na wala just on the mark-to-market of that, right? But currently, where we are now, because it played out already, at a certain yield, even a high-risk guy like me is gonna start thinking of bonds, okay? Like, I don't know, 7, I'm thinking about it. If it goes to like 10%, di ba? Nagtrabaho pa ako, just put some in 10%,
Pwede na.
right?
Pwede na, di ba?
Yeah. What yield that is depends per person. So that's when you start going into bonds. When it's at a yield that, you're willing to let your money sit there.
Yeah. Okay. Sige. Quickly lang ito, kay Chris. Pull out stocks now or wait? Wait
Too
na.
late to sell unless you're holding really crappy stocks.
Okay. Sige. Next group. Meron ba tayong group question? Sector outlook, syempre. From James, as oil prices increase, will the renewable energy sector benefit from it? Edser?
Well, definitely. Yeah, well, definitely, no. The renewable energy sector will benefit from it. But I think, unfortunately, right now, because of the what's happening on our market, a lot of investors are moving towards the more liquid names. I think that's the reason why some of the newer listed companies that are into renewable energy had performed miserably, not because of their prospects, but more on in terms of move or shift towards the more, I think, liquid names, the more established names. But definitely, the renewables energy sector should benefit from a higher oil price increase, because in terms of pricing, they now have an advantage relative to, the oil burning companies. Yeah.
Okay. Next question. I've read about coal futures in a forum. Is it advisable to invest it during the oil crisis? Coal futures. Anyone can answer that? Can anyone answer that?
Are you a gambler? Obviously. If you are sure, why not? I mean, right?
Pero pick na ba yung coal? Is that ano na ba? Patapos na ba yan?
I don't know patapos in terms of magnitude, but assuming there's no major change, if you have a recession, nearly all commodity prices go down when you have a recession.
Yeah, right? But I think the question here is yung coal versus, I think, renewable, di ba? Parang is that parang ganun.
Kasi our renewable companies here have a specific peculiarity. They have exposure to spots, so sometimes they lose money. I just don't want to name names here, but I look at the way their contracts are structured. Not meron dyan natalo actually, but I don't want to say. Right? And just on our liquidity, as Edser said, if their people are moving to liquid stocks, but even they're moving to liquid stocks, our liquidity is abysmal. It's like Holy Week or something. And what did we do today? 3 billion? Manong Holy Week, 2.8? I don't know. Semana Santa Bolet, crap.
And just to add sa call futures, kasi first of all, do we have such market or platform that we can trade here?
Yeah.
So invest medyo mahirap investing in this kind of products. Especially if there's no regulatory environment or a regulator that oversees this operation. It's hard for any investor.
Okay.
Actually, tama si Edser, baka scam yan, ha? Ano naman, 'di ba?
No.
Oo nga.
Sige. Let's stick to mutual funds. Let's stick to the stock one. Okay, next group. I think this is the last one. This is the last one. REITs. Do you think it's still feasible to invest in REITs? Miguel, sinabi mo to kanina, ETFs and REITs.
Yeah, REITs. If interest rates go up, then REITs will go down until their price can reach a yield which is comparable with bonds. So
Mm.
that's just what's happening to them. A lot of them were like parabolic, way above IPO price. Now nearly all of them are below IPO price. So if you're comfortable with that yield, I mean, fine, right? But just saying there are other alternatives with the higher yield in the fixed income space if you're just yield seeking, and the REITs will settle at a level where they're like should be higher. Just to give you an example, when REITs listed 10-year, the first two to three REITs, 10-year yields were 3.8 to 4%. The REITs were listing at 5.5 to 5.9. Okay, 10-year yields are at 7, and your REITs at like what? 6 plus?
Mhm, mhm. So may room pa to bumaba, and then maybe that's a good time to get in. Di ba? Is that what you're saying? That's what you're saying, Miguel.
Well, I mean, unless you buy bonds, I mean, I'm not saying don't buy REITs, but just expect some potential mark-to-market hit na pwedeng mabawas sa yield mo, di ba?
Still,
So
ano,
just
for the
at
next,
this current level.
but as it corrects, that's the time probably you can look at it again.
Mm,
Diba?
yeah,
All right.
more attractive.
Sige, let's get some live questions na lang muna. Ano na tayo. Extend. Nicholas A, what is the specific market indicator to look at by local investors to finally say that we're out of the woods? Miguel, meron ka bang indicator? Simple lang, specific.
When you're close to terminal rates, shortly after inflation peaks.
Ano yun? What does that mean?
The peak interest rate. Terminal rate is like the point where you stop hiking.
Pagka nag-peak na, then that's the time. Okay, next. We have a lot more questions. From Jonathan, when can we expect the fees of the local funds being offered be lowered down, just like the US in particular? Edser, bababa ba yan at this point?
I think right now the ETF again we
May
we only
ETF
have
kayo,
one
no?
ETF, no. I think among the passive it's already the lowest at about 25 bips, if I'm not mistaken. I think, you know, looking at, let's say, comparing us with the US funds where they can go as low as 10 or 5 bips, if I'm not mistaken. There's a peculiarity. There's quite a different dynamics as compared to those funds. First of all, they're large as compared to our market, or rather our fund. It's large. They're large, so definitely the economies of scale is better. So that's the reason why they can offer a lower fee as compared to our locally issued ETF.
So medyo matagalan pa.
Medyo matagal pa, yeah.
Oh, sige, given ito next. Given the current market condition, do you recommend new investors with medium term or 5 years to invest on dividend paying stocks or growth stock? Miguel, from Anne.
Hi, Anne. I suggest it depends on your risk appetite, but if you're just after return, do mostly growth and put some dividend. But again, it's based on your risk appetite.
Yeah, okay. Short answers na rin para mabilis tayo. Adrian, is this the right time to put the money in time deposit instead of the stock market?
What? I think it all depends, diba? It all depends on risk profile mo. But if you're basically looking for a long term, then this is the right time to buy in the stock market.
Okay. Not time deposit.
Not time deposit. Again, it depends on your risk profile and your time frame.
Sige, quick answer pa. Where do you see the 10-year rates going? Is the Philippine market on a sunrise or sunset? Oh, Miguel.
Well, it gets darker before the dawn. That's the answer to question too. On the 10-year rates, it's a function of how high interest rates go. But I imagine you'll still see another 50 beeps in rate hike. So, you know, your 10-year bond yields will definitely go significantly above 7%.
So mga 7.5 to 8, pwede.
Depende.
Yeah. Okay.
Depends.
Let's get a couple more na lang. Question for fund managers. Are equity index fund much safer than equity fund? Miguel, meron kayo nito. Equity index and equity actively managed. I think
safer, yes. More conservative, yes. But excess return over time, equity fund is better even with the down moves.
Yeah.
Actively managed equity fund.
Great. Okay, from Luis, can one compute for a mutual fund's intrinsic value, much like a stock, so that one can determine when to take profits to avoid being too greedy? Edser, can you try answering that? Meron ba tong intrinsic value ang mutual fund?
Parang hirap ano yun na kasi that's a very you can but it's a very tedious exercise. First of all, you need to determine each content ng portfolio. And then definitely you need for once you've seen the whole content, then you have to compute for every stock's price target or intrinsic value. That's
And
how
then
you
and put a weight.
yes
Weight mo.
yes oo.
Mahirap yan, ano?
Technically yes, but it's difficult.
Parang
Luis, just buy stocks if you'll do that. Don't buy funds.
No.
Kung mag-intrinsic value ka. Ito, maybe couple more na lang, ha? Si Alvin. The purpose of my portfolio is for retirement in 20 years or so years. Should I reassess my risk profile and adopt more defensive strategies, or can I stay on my current track? Miguel.
I don't know what your current track is, but going more defensive means you'll have less return, therefore less money left for your retirement. So I'd say you may want to be a bit more aggressive, but not yet right now. Like you can just nibble. Then when it's clear that things are like so bad already, can't get any worse, you can start buying a bit more. Then when you hit certain things like certain metrics, you can be more aggressive in buying. Is the time to aggressively buy now? No.
Okay. Sige, last question na. Last question na tayo. Medyo nag-overtime na tayo. But hi, any sectors, industries you're seeing to be stronger on both local and global markets? Edser?
Stronger. Right now, again, for the domestic market, the strategy right now here is go defensive and defensive sectors such as telco, the power sector. But I think in terms of the global markets right now, I think that is also primed to be the same in terms of the strategy. Go for the defensive. I think yeah.
Yep. Sige. Miguel, you want to try this?
Okay, if you're entering a recession, all your cyclicals are gonna get killed, and our index is mostly cyclical. So you want to do like consumer, non-discretionary, and defensive for now.
All right. Okay. Sige. Yun na muna. Gentlemen, maraming salamat. Maraming salamat. Any last few words? Una muna, Edser.
Well, I think my last, my final word here is, you've seen this. Every I think for the past 25 years, even Marvin had been in this industry for longer than I am, and we've seen a lot of this kind of uncertainties. I think economic downturns, and for every economic downturn, or some say a desperate or a very negative mood, that's the time for those investors or for those that are knowledgeable. This is the right time to to invest or to wait for it, look for opportunities. And I think that's the only way that you can do. And for those that have already in and have, let's say, are now suffering from some losses, I think it's too late for you to sell. The best thing to do is you still have money left, and this is the best time to do cost averaging in order to smoothen out your investment.
Thanks, Edser. Miguel?
Economies are in expansion more often than they are in recession, and expansions last longer than recessions. The stock market is in a bull market mode more often than it's in the bear market, and the bull markets also last longer. So keep your powder dry. The time to make a lot of money is coming already. Good night and enjoy your dinner.
Yeah, salamat. Thank you. Bake your powder dry and get this opportunity. Salamat, Miguel.